If you too are buying a new house by selling your old house, then you must understand tax implications. The capital gain is taxed in two ways on the profits made from selling the house. If the house is sold after keeping it for 2 years or more, then it will be considered as long-term capital gain. The amount of capital gain will be taxed at 20% after indexation benefit, whereas the profit made by selling the house before 24 months will be treated as short-term capital gain. This profit will be added to the regular income of the person and will have to be taxed according to the tax slab. Now let's get to know when and how tax can be saved. Section 54 of the Income Tax Act gives tax relief on buying a second house from the income generated by selling the old house. This benefit is only in the case of long-term capital gain. The income tax law recognizes that in such cases the objective of the seller is not to earn by selling the house but to find a suitable abode for himself. Which type of property will get tax exemption on purchase? It is clear in Section 54 of the Income Tax Act that the capital gain should be used only for the purchase or construction of a residential property. That is, tax exemption will not be available on the purchase of a commercial property. In the case of land on the purchase of a plot and construction of a house, exemption can be claimed on an amount equal to capital gains tax. Tax exemption will not be available only on purchase of land. So by when should you buy a residential property? Under Section 54, the new house has to be purchased within 2 years from the date of transfer of the old property to avail the tax exemption. Whereas in the case of construction, the house should be completed within 3 years. If you buy a new house even 1 year before selling the old property, then you can avail the tax exemption. Tax and investment expert Balwant Jain explains that on the sale of a residential property, reinvesting the long-term capital gain in another residential property is tax exempt under Section 54. Even two residential properties can be bought or built from the profit of one property. However, there could be a catch here. This provision may be used only once in a lifetime, provided the capital gain is not more than 2 crores. Jain says that if you want to buy a house and you are not able to use the capital gain money till the date of filing ITR, then that money will have to be deposited in the bank under the capital gain account scheme. If you do not do this, you will have to pay tax. One thing to keep in mind here is that despite keeping the money in the capital gain account, you have to buy a residential property within 2 years or construct it within 3 years. Otherwise, long-term capital tax will be deducted at the end of the prescribed period.